So with that, we will jump in here tonight. This is, I'm going to pull this off sharing. All right, Robert and Dave, are you with us?
Absolutely.
We are.
Welcome. We are so glad you're here.
We're glad we're here.
We are glad we're here. We're glad each other are here.
I'm sure that's true.
And I've heard so much amazing feedback. So many of our members are pumped for tonight. So hey, let's jump into it. To start off, what are your guys' reactions to the current events? Obviously, the whole world's gotten flipped on its head. So much of the industry and nation and world is shut down. Where is your head at in this world, and what do you expect for the days to come? Robert,
all right. Well, there's a big question. No doubt the very fact that we're here virtually shows you that the world has changed. And I think part of it has changed forever. I don't think we're going to get back to what life used to look like exactly. Sure, we'll get back to, meeting and seeing each other and maybe even shaking hands and hugging, but it's a different world now. And I think this is one of the things people have to come to grips with. And the sooner you do, the better. Whatever the new normal is going to look like, and I don't purport to know what that's going to be yet, but there's going to be changes. And people are either resistant to change or open to change. And you kind of talked about this at the beginning, Michael, but I think you have to open your mind more than ever. As human beings, we have what's called a normalcy bias. We expect to wake up in the morning and have today be pretty much like yesterday, and our lives be like they've been. And sometimes that's true. And if it's going well for you and you're in a pattern and a routine, awesome. But when things shift, we tend to hang on to the old. And so there have been folks that have been not wanting to get with the program, if you will. People that were resistant to not social distance, people that were still getting on airplanes that maybe shouldn't have, all that stuff. And I think by now it's evident that there's a challenge. Now, I hear both camps. There's a camp that believes, hey, we've overreacted and the economic melee is worse than the health. And there's the group that says we're not doing enough to stay healthy. And I don't want to weigh in on that. What I want to weigh in on is the fact that we have an opportunity as investors and as human beings when things change. The last time we saw a major change, for example, in the real estate markets in 2008 and 9, it was a huge change. There were winners and there were losers. And the winners were the people that adapted to the new normal faster than the rest. So I years ago had a woman I interviewed on the radio show named Bonnie St. John Dean. And she was an amazing Olympic athlete, but she was in the Special Olympics because she only had one leg, and she was a competitive downhill skier with one leg. Wow. And she told the most amazing story of being in this race with just terrible conditions, and everybody was just freaking out about how bad the weather was, and they talked about canceling it, but the race went on. And what happened to her is she fell down, and she got back up and finished the race. But what happened once she saw the whole picture was that every single racer fell down, and the racer that won was the one that got up the fastest. That wasn't her, but that was a huge lesson. Everyone fell. The one that got up the fastest made the best result. And that's really what you have to do. So I would say, if you're still poo-pooing the whole coronavirus thing, whether we agree with it, whether we like it, it's here. And I think we're going to see a ton of change still coming because of it.
Yeah. No, I love that. Love that. Dave, do you have some opening thoughts on the whole craziness?
Yeah, so, I agree with what Robert said. I believe there's going to be incredible opportunities coming out of this. And I think, we've had multiple discussions around this. My brothers and I, we've run a modular building business together. And so I'm kind of looking at this from two facets tonight. One is through investing and investor appetite and in the investment world. And then the other one is through, business and manufacturing. And, we've had conversations like this, and like, look, guys, we're in for a new normal. And what does this look like? And so I think I totally agree with Robert. the people who embrace the new sort of world that we're in and make the best of it. You know, coming out of 2008, 2009, 2010, and even 11, you would hear, you know, excuses like, you know, oh, the economy, this and the economy, you know, it was like the default excuse.
Mhm.
And, you know, there were some people out there making excuses, and then other people were out there making it happen. And so I think this time is no different. There's going to be opportunities, the guys who adapt and adjust. We made, you know, back in the last financial crisis, back in the last crisis in 2008 through 12, 11, we made some changes in our business model and came out of that much stronger. And I think we have the opportunity to do that again. Investor appetite remains pretty strong. If you'd have told me, I made a comment today, you know, if you'd have told me you could shut down the economy and put our economy, our state in lockdown, or our country in lockdown, and life would go on as sort of as well as it had, I'd have been shocked, because our businesses, I mean, you know, there's winners and losers in this space, and I feel terrible. I got friends who are, you know, I got a friend who's in Lancaster who owns 4 restaurants and a gym. You know, they're all closed.
Yeah.
And so, you know, you look at that and you know, that's bad. But you know, I agree. The people who adapt and adjust and they're able to, you know, look at what life has given them and then go out and make something out of it. I think those are the guys that are going to win.
Well, I'm guessing that would be you, Dave, because you're one of the fastest adapters, adjusters I've ever known. And that's just one of the many things that we admire so much about you.
Thank you.
Dave, you talked offline about some of the changes that were hitting your portfolio. You know, you're in a lot of different asset classes. You talked about, you know, some of your apartment complexes and some of the differences in financing. So could you go into that a little bit more and just kind of give an update on what you're seeing out there?
Yeah, so right now I'm glad I got some diversification. You know, when I look at my portfolio, one of the things I'm concerned about is multifamily, and you know, no evictions and ability to pay rent and those kinds of things. So there's some challenges, and there's been some challenges. You know, we've had you know, for several reasons I was concerned there. I've had challenges with a partner in that space, and you know, I had to step in and take over, and not a position that I was looking to get to take over, but it was handed to me, and I had to make something out of it. So you know, there's challenges in any kind of business, any kind of asset class, any kind of investment. But one of the things that I believe more today than I ever have is, man, if you do business with a great team, if you do business with good people, if you get around good people, if you hang out with good people, and you know, life becomes so much easier. And so, you know, I just to me today, I spend a lot more time you know, vetting the team and making sure the people that I'm doing business with, I'm doing a lot more work on that side than the actual asset itself, because I know if I have really good people around me, they'll find a great asset and they'll make it happen.
That's a good word.
Love that. That's something that was revolutionary for me with getting around both you, Robert, and Dave, and the order of importance when choosing different portions of a investment. You know, a lot of deal people are out chasing deals, and that's the way I was. Thankfully, I was in a good market and I was the team, so it worked out. But as you start growing and expanding your vision and getting some experience, I couldn't agree more that the team and where you buy your asset, both of those factors are way more important to Jerry and I now, thanks to teachings we've heard from both of you guys and our experience. The market and the team that you're with are both more important than the asset itself. The easiest thing is to buy a good deal day one. It's easy. Anybody can do it. But who makes that deal work day two through the exit strategy is not near as easy as signing some papers.
Absolutely.
Hey, I'd like to ask a question because you both mentioned, being prepared for opportunity, and the most obvious opportunity is that stuff could go on sale as things become more complicated to manage. Can you speak to any other areas that you would be looking for opportunity, or that you would be just maybe you just like to speak to the whole group as to how we can open our minds further to see things that maybe we wouldn't have noticed before, and kind of embellish the whole opportunity mindset?
Yeah, that's a great question, Jerry, because I don't think it's if, I think it's when we're going to see opportunity. And the reason is not everybody is structured to weather the storm. Some asset classes, product types within real estate aren't doing as well. If all of my tenants work at the local movie theater, they've been out of business and therefore they don't have jobs, and maybe they got stimulus money and maybe some of it went to me as the landlord, but certainly different assets, and Dave spoke to this, are reacting differently in the era of COVID-19. So I think a big part of it is just knowing we're going to see some opportunity isn't the same as being prepared for that opportunity. And you really have to think through it. Our normalcy bias I spoke of is going to say, hey, look at that retail property, it's on sale. Well, it might be, but if the tenants aren't the type of tenants that are going to do well in the new normal, then it still may not be cheap enough. Meanwhile, we love residential real estate because I can't see us ever getting to a place where humans won't need to sleep under a roof. So we think there's good vibrancy there. In fact, real estate is pretty resilient. I love the name of Dave's company, the Real Asset Investor, because real assets are where it's at in difficult times. Things that are tangible and real, things like real estate. Back when the stock market went crazy 4 weeks ago and people's portfolios were down 25, 30, 35%, you'd ask one of those investors, well, let me ask you this, has your mortgage or rent gone down by 35%? And they'd say, well, no, my mortgage is the same, my rent's the same. Exactly. And the investor on the other end of that has not taken the hit you have. Not trying to say real estate's better than the stock market, although I personally believe that. What I'm saying is that not everything reacts the same. And real estate long-term is very resilient. Yet at the same time, and this is more direct to your question, Jerry, what is going to be a good deal coming out of this? That's where we have to really engage, really be in the game, pay attention to the things that are working now, the things that are going to work long term. And as this thing unfolds, I think a lot of us are going to have the ability to help the investor that wasn't structured right. That's a different mentality than I'm going to be a vulture and put together a fund to scrape up the carcasses. There are people that feel that way. I think the other side of it is, no, there's going to be an ability to help. And if you help folks, then usually good things come to you.
That's awesome. That's an absolutely great word. Thank you.
Yeah, 100%. So, as this thing plays out, when we open back up, all those things are still question marks. And, with real estate, it does take time. Like you said, the stock market, we knew right away there was problems. Real estate, it's more like a slow moving train. With not knowing where that train is going to be in 6 months, 12 months, 18 months, what can investors do now? What are you guys doing now? And what's your mindset like? Are you looking for deals? Are you focused on business efficiencies? Talk a little bit about what you're doing personally and how that might translate for investors watching. Dave, do you want to take that?
So I think, and I'll give you an example of what I went through when I did a recent refinance. But because of that, and just a whole bunch of other stuff that's going on in the market, I mean, number one, I think that it's a little early to tell, but I do believe, in talking to bankers and talking to several of our lenders, kind of keeping a finger on the pulse of what's happening in their world. I got a number as high as 70% of the transactions that were slated to happen are either sort of froze or slowed down, or they're not happening at all. And I'm talking about big real estate transactions, and here's the reason, or here's one of the reasons why we refinanced out of a HUD loan, and we started this process in November-ish, and we were supposed to have it done by middle of February, and so we're coming down to the wire and right into the jaws of the coronavirus. And so all of a sudden the rules started changing. All of a sudden, I mean, it was like every other day they were coming up with something else, and by the time it was all said and done, we got the deal done, but we had to come to the table with an extra $750,000 to cover 12 months principal and interest, 12 months taxes, 12 months insurance, extra maintenance reserve. So not everybody. I mean, fortunately, we were able to get it done. The property appraised very well, and we did it. But imagine, I was trying to imagine, funding that deal with a group of investors, having to go back to your investors saying, hey, we're going to need more money and the returns are going to be less than what we projected. That would have been tough, and some of those deals didn't happen. So I think over the next 6 to 12 months, some of those deals are going to be coming back to the table, probably priced a little better. That's that's just one of the ways. Forget all the, downturn or maybe less than stellar performance, maybe some of those other things that are going to slap a discount code on that asset. But that's just one of the ways, and that became pretty clear to me when we were right in the middle, right in the thick of things, trying to make it happen with our deal.
100%. Yeah, not everybody makes that corner. How many operators out there could just get out the checkbook and make that happen? So it's awesome that you were able to. But yeah, no, that's a factor for sure.
Yeah.
Robert, you talked about what an investor can do to prepare during this time that isn't combing the MLS for new deals. Can you elaborate on that of what you're recommending, what you're doing for yourself?
Yeah, absolutely. I think one thing that we all have now perhaps is a gift of time. So if whatever you're doing is less busy than it was, you got to do something with that time. So you come out of this either having binge watched whatever show, or bettered yourself. I think this is an extraordinary time to do what you're doing right now. Get educated rather than, go blow off steam. Focus. And there's a lot you can learn. I've already learned today on this very format. So I think it's a great time to get ready. That doesn't mean you don't take action. So if a good deal comes along, we're ready to go. But I'm with Dave. I think we're going to see that play out. Just take the example of lenders. Lenders are always about weighing risk and reward. So when you borrow money, they want to know how you're going to pay them back. So with a commercial property of any kind, they're going to look at the income of the property and make sure that the property can sustain the debt service plus a little more. And then what happens if you don't pay them back? Then they're going to have the ability to take the asset and so on. Well, the reason we're seeing lenders today insist on more reserves, exactly what happened to Dave and his group, I've heard that story amplified times 100, is because lenders are trying to mitigate risk. They know that we could see the landlords coming up short, that tenants, either temporarily or not, are going to have a hard time paying rent. Not all tenants, but a percentage. And therefore, to be prudent, they're going to rely on things like more reserves. In reality, that really isn't a problem for the buyer as much as it is for the seller. Let me explain. Immediately, it was a problem for the buyer. You've got to come up with the money. But here's what's going to happen in the markets overall. If in fact lenders stick to that higher reserve amounts, then that's absolutely going to dilute the returns And the only way to make that dog hunt is to bring the asset in at the right price. So who's going to pay for that? Unfortunately or fortunately, I guess depends on which side you're on, are going to be sellers, not buyers. And the marketplace, just like the car business. The car business is not about how much you pay for the car. It's about how much you can afford monthly. If you're like me and you don't like that kind of debt, I buy my cars for cash. The dealer doesn't like that. They don't make nearly as much from me, even though I buy cash. I would expect to get a cash discount. It's not as much as you'd think on a new car because they're not going to get all those other sources of income. So we come out of this thing, and lenders are either going to stick to their guns and have to have these kind of reserves, which is going to bring the price down of assets. Sounds bad, but ultimately that could create great buying opportunity. Or lenders are going to fill that void and figure out how to make those loans to worthwhile syndicates and owners so that they can see the other side. Today, we're seeing a lot of retrading. If you were in escrow when this hit, you're probably reconsidering, and not too many sellers are blind to the fact that the deal has changed. So what I'm hearing mostly is retrading. Now, I'm in a transaction right now, and I'm the seller. I'm not very often the seller. I'm much more often the buyer, but I have an asset where it was too good of a deal not to take the deal, and it happened pre-COVID. And I was fully prepared for it to not to happen, but this particular buyer wants to go on with it, so I'm good. I've been waiting for them to reach out and say, hey, don't you think we should adjust the price? And they haven't, and it's supposed to close later this week, so we'll see. I think in terms of just knowing that the rules are going to change, there's 100 directions it could go. And here's the thing, you're going to have to pay better attention. When markets are going up, you don't have to be that sharp. You don't have to watch as carefully. But when the market's going down, nobody wants to catch a falling knife. At the same time, there will be deals. You just have to make sure you are more prudent and diligent than ever before.
Mm-hmm. Yeah, love that. No, love that. Yeah, I can say for our investing in my wife and I's portfolio, we did a refinance since the last meeting. We have another one coming up next week. So for me, you see the interest rates going down, yet you have to have good relationships with lenders to still get deals done. So, Dave's talking about, big apartment complexes that he's working on. Just to give a perspective on some of the smaller multifamily, you see the interest rates coming down, the Fed's slashing the rates, but that doesn't always translate to lower rates in your mortgage, depending on where you go. I've had people reach out to me, when I'm, sharing that I'm doing some refinances, and they're like, well, my bank said this, and it's, one of our members said, the bank is giving me 30% LTV, 5%, 5% interest. And I said, well, that is not competitive. So I connected him with some different banks. All too often we can ask the same banker that we've been using for the last 10 years, and bankers are, like Dave and Robert said, getting a little nervous now. Even if they're not nervous, there's uncertainty. So they're being more conservative, but then there's other lenders who are still open for business. So that's why having multiple relationships, reaching out to multiple lenders to see what the appetite is for the type of project that you want to do is critical. Because we've not only refinanced, but reset rates on a lot of our mortgages, saved a ton of money just with pushing some papers. Mm-hmm. And one last thing I'll say on a refinance, if you're going to refinance, it's probably good to do it sooner than later, depending on how long this thing goes for and some deflation that may happen in asset prices. So an appraiser is not supposed to try to guess at what the future might bring. They're to use today's data to support a price. So if you pull the trigger on a refinance here soon, and they're pulling data from the last year, those are pretty good comps to support a value for you to get the appraisal you need. if you sit around and you're, binge watching Netflix or whatever, and, things start trading for less, that then will affect your appraisal, will affect your refinance. So I'd move quickly. There's no reason not to. If things keep going down, you can, hopefully rate reset, or do some, have some other options. But unless you're going to ride it out for a while, I'd pull the trigger fairly quickly. Jerry, there's the resources that we have to invest, but can you talk a little bit about how to protect your mindset during this time? Because if people are not careful what they're watching on the TV or Facebook, it's real easy to get pissed off at the other side of, like Robert said, there can sometimes seem like there's two camps on whether this thing is, everybody needs to stay home and let the thing flatline, or, that's causing more damage than it's helping. And again, we're not here to say which one is you should believe in, but you have to be careful to monitor your psychology.
You really do. And at the same time, any of us can pretty much tell what somebody that we're talking to has been watching, because whatever they've been watching is gonna come out of their mouth. And so, and the same thing is true of me, it's true of Michael, it's true of every one of us. So, what's really cool is, as intelligent human beings, we can actually observe that in our own selves. And I find it very easy when I get to the end of the day, if I'm feeling not creative, if I'm feeling, oh my goodness, this is all going wrong, this is all bad, then I begin to think to myself, okay, what did I input today that's causing me to be in that state of mind? Because the most important thing in life is you have to stay in a state of being creative, or you're just going to be hopeless and do nothing except wait until the whole world crumbles around you. There's still opportunity, and every one of us has a choice as to how we're going to interpret the facts that are put up in the screen, that are laid out in front of us, and what we're going to do with that. So it is so important to just have an input into your life that is going to bring hope, it's going to bring intelligent thoughts, going to bring creativity. Yeah, and I said this, I think, in our last Wednesday night meetup, is that a very good friend of mine, and he's quite a bit older than me. That might be hard for you younger ones to believe, but he's actually quite a bit older than me. But in all the time that I've known him, which has been about 20 or 30 years, he has often said, I never ever watch the news, because what comes in through your eyeballs impacts your emotions. And what impacts your emotions does not impact your intellect, and then you are not thinking. He says, it's actually pretty simple that what you read actually goes into your being in a totally different path and ends up in your intellect. So when you read the news, it comes to you as thoughts and ideas that you can weigh, that you can discern, that you can say, well, how's that really going to work out? Do these numbers really add up? Do what they're saying actually make sense? But you don't have that experience when you're watching. When you're watching, they're going to show you the most horrible thing that will totally terrify you, in hopes that you'll tune in again tomorrow to have your day be taken to another level of terror. But you can sign off of that. The good news is you don't have to sign up for that. You are a free-thinking human being, and you can decide what you're going to believe, and you can interpret facts and reality intellectually instead of emotionally. And I'm hoping this is making sense to you, and I'm hoping you're thinking, yeah, that might be better to look at it intelligently than just emotionally. Because if you can do that, you'll be able to think creatively. And I think that's when opportunities are going to begin to unveil themselves to us, as everybody's looking at the same facts, but everybody's seeing a different picture.
Yeah. If anybody's read the book Influence by Robert Cialdini, he talks about the different triggers that humans have and how he calls them compliance practitioners play on those triggers to get certain behaviors out of people. So it's a fascinating topic and book, but the point of me bringing it up is, as leaders, as people who want a better future than we've had in our past, we need to not be those people that react in a predictable way. Mm-hmm. So part of being self-aware is seeing, you receive a stimulus, but you don't react to it. You watch maybe how you want to react. So you're watching yourself, you're self-aware, but then you choose how to respond to that. So instead of just being led by reactions, you choose how to respond. Dave, this is something I'm just curious about. I mentioned before, your resourcefulness has been a quality that's just really stood
legendary.
out. If it isn't, it should be, and it will be, I'm sure. But I've just seen you be so creative and resourceful. So Jerry's talking about how to kind of protect that in your own psyche. But do you have any, I don't know, tricks or things that you think about to keep your mind spitting out more solutions? Is that a natural gifting, or is there anything you can share on that?
Yeah, so I think just like you have to guard what you put in your mouth, because that's going to manifest in what how you want to look or not. You got to guard what goes into your mind, and one of the things I do in the morning, well, after my devotions, and my ride to work consists of about 8-minute drive, and Darren Hardy's morning his morning minute, or his daily Darren daily, is about 4 to 8 minutes long, so it works perfect. That's my drive to work. So I think it's, especially in times like this, you got to guard what you're putting in your mind, what you're reading, what you're watching, what you're listening to. It's easy to get caught up in the chatter about all the negative stuff, whatever. But you really got to be intentional. You got to guard. I just believe that, and I've believed this for a long time, that the flip side of a challenge is opportunity. And you mentioned one of those, so, an apartment investor or a self-storage investor, or somebody that owns an asset can look at this like, this really sucks. I mean, my asset's going to go down in value. My tenants aren't going to pay. And, this, woe is me. You mentioned that you're doing a refi, and how that's saving you a lot of money. Well, you wouldn't have got an opportunity anyway so quickly to refi the rates you are today. So right there you have it. Huge challenge, great opportunity. So it really depends on how you look at things, look at business, look at life. But how you look at life can also depend a lot on who you're around, who you're talking to, who you're spending time with, what you're reading, and what you're listening to.
100%.
So good.
100%. When you talked about the opportunities that this time brings out, I was on a Zoom call with some local landlords and community organizations talking about what landlords can do, and they ended up taking my comments and putting it in being the front page of the Sunday paper. But
as they should.
Appreciate that, Dave. Appreciate that. You can I'll send you the guy's email to remind him for next week. And basically my comment was the opportunity that this is to build relational capital with your tenants, with your vendors, with your neighbors, when everybody else is freaked out. We all remember where we were for 9/11, and I don't know if you weren't around for JFK, but there's
thank you very much. I actually was living, but I wasn't old enough to notice it too much.
Okay, so there's these different events that are landmarks in people's minds, and they'll never forget them. And if we have an opportunity, I was talking in the context of our tenants, the way that we've reached out to them, been empathetic with them, offered to help, and we do that with other people as well, can be a landmark event for them. So it's an opportunity to stand out from the crowd when everybody's cowering with their scarf over their face. And I'm not saying you shouldn't have a face covering or anything else. I'm just saying the way that you show up doesn't have to be cowering. You can have a face mask on and still be kind, generous, loving, care about your fellow man instead of being locked up in fear. So one of the opportunities that we have is to go out of our way to show love and care to others.
People are searching for hope, confidence, positivity, you know, the opposite of that is everywhere all around them. So people really appreciate that in today's world.
Very much so. It's easy to stand out as an extraordinary person
Exactly.
in times like these.
Yeah, exactly. The contrast is greater.
Yeah, very much so.
Robert, one of the questions I'd have for you, we didn't necessarily talk about it, but you have such a wide skill range that I'm curious, of all the skills that you have, that you learn about, that you teach others, what are some of the most important skills that, you know, while we're in this, you know, a lot of people have extra time, what are some of the most important skills that folks can be putting into, you know, can be learning and growing in themselves?
Yeah, great question. I think, you know, everyone knows where they're at, you know, and Good to Great, Jim Collins says you have to confront the brutal facts. So I think it's a great time to take inventory. You know, what do you have working for you? Some of the things we've already talked about, many of the things that came when you guys shared your values, like relationships, like being authentic. There's certain inventory that you have. So I would start there. And it's, you know, not politically correct to pat ourselves on the back, but in the quiet of your own space, acknowledge some of your greatness. There are things that you are extraordinary at in your life. And maybe they're the things that are obvious. Maybe your vocation's built around that. Maybe everyone knows you in those capacities. That would be awesome. But there may also be some things that you're not necessarily recognized for, but you know that you're competent at. Now's a good time to take stock. And then the flip side of that is, where are the things that maybe I'm not really set up for? And how can I better myself there? And because we have this pause and times are different and we know the future is going to be different, you also get the added benefit of saying, okay, what are the skills I need going into the future? What are the things that if I could be better at, I'd like to be better at, which is a great start. Now, you've probably heard me talk about this many times, at least the three of you. But there's two schools of thought in personal development, and love the fact that you guys include the personal development piece in your teaching, because it really is where the rubber meets the road. You know, you can't just take an idiot and motivate him, as Jim Rohn says, or you get a motivated idiot. You've really got to inspire people to be more in order to do more and have more. And I think that it's an excellent time to just sharpen your axe, sharpen your skills. So whatever that might be for you. Now, some of the things specifically that I'm working on that I think that have come up, you know, I think of it in terms of managing my psychology. I tend to be very optimistic. I tend to be very inclusive, but it isn't natural necessarily. I think we have to work at all those things. And I think everybody catches themselves from time to time showing up in a way, behaving, getting in a conversation that in hindsight you wished maybe you had done a little differently. Yeah. And so this is, for many people, a new era. Like, this is a definitive line where there was pre-COVID and post-COVID. And how do you want to show up in that new reality? It's been said by a lot of folks right now that we're seeing the best and the worst in people. And I think that's true. So you need to take a hard reflection at yourself and say, okay, where is it that I could be doing better and should be doing better? And where can I capitalize on the skills that I have? So appreciate the comment about having skills. Everyone has those. And the people that learn how to utilize their skills the best are the ones that come out on top. So the two schools of thought in personal development are, number one, I'm going to look at everything that I'm not very good at. And if I focus on getting better at those things, then I'll be a better person. And I think that's true. The second school of thought is, I'm going to look at my life and figure out the things I'm good at and the things I'm not good at. And rather than try to get better at the things I'm not good at and maybe not interested in, I'm going to design my life in a way that I do the things more that I'm really good at. Now, those are two different ways to approach it, and it's not right or wrong. It's two sides of a coin. You can probably tell from my energy which one I subscribe to. I think there are certain things that you're just never going to want to do. You're never going to be good at. And that comes back to Dave's number one success secret, which is surround yourself with great teams. There's someone on the team who will do the thing arguably better than you will, enjoy it more, get it done faster. Why would you rob them of that? Instead, design your life from this point forward where you're doing the things that you are uniquely created to do, whatever that is for you. Instead of saying, I'm just going to get better at due diligence because I'm not good at it, why not just focus on your natural giftings? Not saying you can't refine those things, because you sure can, and all of us do. But it's a tremendous shortcut to just start with the stuff that really is good in your repertoire and focus on that.
And it works so well.
It does, and you enjoy it.
It is. So just everyone who's with us tonight, just imagine if you took the one thing that you were best at and took it up by, say, a level of 5 or 10%. You're already best at it, so you probably enjoy it. And I think the results are exponentially more impacting than that first way that you described, which I don't subscribe to at all. But thank you for mentioning it.
Well, it is one of the natural things people do. Like, I'm no good at that, so I'm going to go take a class so I can get better, which means you're just focusing more time on something you don't gravitate towards. Therefore, you're probably not going to enjoy. You're not going to, right? It's not going to work.
Be really good at it. So it's going to be a lot of time, unenjoyable time invested for very poor results.
Bingo.
I was just teasing you. I agree completely.
Yeah, part of it comes down to, do you believe you were put here for a purpose? And if you do believe that you're on this planet not by accident, but for a purpose, do you think you might have been sent with some unique gifts? And would it be worth the time and the energy to go digging for those? As tempting as it is to see a guy like Dave Zook or Robert Helms and think, well, I better start buying all kinds of assets and should also start a podcast on the weekends. The most important thing is finding who we've been created to do, what we're uniquely qualified to do. So that's awesome, Robert. I didn't know that's where you were going to go, but that's the best advice you can have. What skills are we developing right now? Well, there isn't a blanket answer for everybody. It's what is going to make the most traction for each one of us.
Exactly.
That's right.
Love that. I don't think I mentioned it before, but we are going to try to save time for questions. So in a few minutes here, we're going to be able to open it up for questions. So if you have those, there's a Q&A place, a chat place. So feel free to leave some comments there. Have Austin Mountain in the background helping with questions. So if you have something on your heart, share that.
And while we're waiting for those questions to come in, I'd like to ask you, Dave, you're always into something new and that's out there, and you're always seeing opportunities. I don't expect you to tell us something that you're not ready to tell us, but I'd sure love to know what you're seeing as opportunities as you look into this next year. And just if you'd elaborate on that, I'd love to hear it.
So a couple things. One is we've got to embrace technology. We've got to embrace technology in our business, to our investors, to our customers. It was probably a week or two in to when we figured out, hey, we probably are in for a new normal. This isn't just going to go away, and we're not just going to flip the switch. We're not going to just go back to the way we used to do business. And so, what are some of those things? And so we got, we're right now, we're and have been for the last couple of weeks, we got a coach in that's teaching our team how to leverage Zoom. You got and this is across, several businesses and for, investing clients.
Sure.
How do you present? How do you get really good at presenting? How do you present on Zoom? How do you, what does that look like? And we're practicing and we're talking, we're getting coached up on it. And so that's one opportunity. The other one is we're now blessed with, or we're right in this time. One of the questions that I used to still ask, when I get ready to invest in a specific asset class is, how did this thing perform in 2008, 9, and 10? I want to see, is it a resilient asset class in case stuff goes wrong? And so now we're now blessed with something a little bit more current, and now we can see what, how did a certain asset class perform, and so we're getting a pretty clear picture of that. So that's an opportunity going forward.
Yeah.
you know, as much as I would have liked to take advantage, and I was on the phone, you know, when oil was the day that oil dipped to negative 37, I was on the phone with a guy at about 1:30 in the afternoon, and oil had just dropped from $20 to $10. And I get this call like, look, why aren't we out there buying, you know, 1 million barrels of oil? And, you know, one of my comments was, well, you stop and think about this. Like, who's the buyer? Like, nobody's flying. Most businesses are shut down.
Mm-hmm.
Nobody's driving. You know, who's the buyer? So I said it could go no bid. And by the time I got off the phone, I checked it again. It was like $1.15, and you know, within the hours, it was down 37 something. So I missed the mark on that quite a bit. But as much as I would have liked to take advantage of that situation, I didn't have the team. I didn't have the team in place, and you know, I was quickly thinking, well, man, surely like storage or futures or whatever. But I didn't have the team, so I let it go. So I think I had some conversations with some intelligent folks in that space, and they said, look, if you don't know where you're going with it, and you're not part of the insiders club, don't go there. So took the advice. Um, you know, I'm sure those guys made a ton of money on it, but I stayed away just simply because I didn't have the team.
Well, and you have disciplined investing. So it's not just running around with, 6-barrel shotgun looking for what looks like a deal. You have some principles in place for the team, so that, you know, you're not the expert in something that you're not an expert in.
Well, that's a good point, because by my very nature, I'm a speculator. I love speculating, and I got to discipline myself to be a cash flow investor, an equity investor. I mean, I got to discipline myself to be those things, because I know that it's necessary, and I know that's a good way to build long-term wealth. But when I can, I'll just give you an example. I love this stuff. I was, restaurants closed down. The market is flooded with beef. Had a good friend. It's actually the guy that is at our investor party, cooking up beef that night. I called him. I said, "Look, you got the best beef in all of Philly. Where's the opportunity here? I'm looking for a good buying opportunity. I mean, this is now for consumption. This was I wasn't gonna buy and sell and trade and any of that stuff. But I'm like, prime fillets, what are they selling? Well, he's selling it for $23.99 a pound, and it just happened right at that time. Over about a 2-week span, he's selling for $10.99 a pound. Wow. So I ended up with like $4,000 worth of beef in my freezer. So, but the point I'm making is, by nature, I'm a speculator. I've got to discipline myself to be a cash flow investor and invest in solid assets that build wealth slowly.
Yeah.
Awesome. Curious if you bought OSB during this time.
We have so much OSB. We actually built a building within the last year. We built a building to store it, knowing that the OSB price only has to go up about $1.25, $1.50 a sheet to pay for the whole building. Wow. And we were buying it at below $6 a sheet, and just recently it touched $10.
Yeah.
So we're swimming in OSB.
Good for you. I figured you were. I was thinking about you as I was watching the futures going up and down.
Yeah.
So in our last few minutes before turning it over to some questions, I know, Dave, you talked about a resource that you had here recently with part of your team that you were going to make available to folks. Robert, I did not ask you prior to the meeting, but I know you guys have an investment, basically education webinar, or however you're doing it, on the crisis with a lot of your friends. Is that something that folks could get more information about if they were interested?
Yeah, thanks for that. We've got a bunch of big brain friends, and we love to talk one-on-one with them, often as guests on the radio program. Sometimes we jump on a call with 2 or 3, and whenever we can get a bunch of them in a room together, it's extraordinary. Like you guys have been on our Summit at Sea, the highest level event that we do as the Real Estate Guys, and what makes it super unique isn't just that we have these amazing speakers, but that they talk to each other. We do a lot of panels, a lot of interaction. So when this all came down, we started to, tap our friends' shoulders, and we're putting together something we're calling the Crisis Investing Webinar. And I think it's going to be extraordinary. We're right in the middle of producing it right now. We've done several of the interviews and have several more scheduled over the coming weeks, but it's going to be no charge. It's a free event, and it's going to be really in-depth. We've got just some extraordinary folks weighing in, economists and investors and authors and people from various walks of life. We've got people that come from the Federal Reserve, people that come from banking, people that come from private industry, people that come from big corporations, people that come from science. So rather than make a big commercial for it, it's real simple. Just send an email to crisis@realestateguysradio.com, crisis@realestateguysradio.com. That'll put you on the list. It's probably still 3 weeks, I would say, before it's finished. It's a big, heavy lift to get these folks together. Their schedules are a little more open than in the past, but just getting them, locked down and figuring out how to get the most out of these people. But the interviews so far have been just extraordinary. Great, great, great stuff. So thank you for that mention. We'd love to have people sign up for that.
Awesome.
Right.
No, it's a great resource. Yeah, for anyone that doesn't know, I don't think we said this yet. Robert is who taught first Dave and many others, but also Jerry and I, the whole syndication business. So Robert's been a mentor. The Real Estate Guys have been just instrumental in Jerry and I's life.
Absolutely.
So we couldn't recommend them and their events anymore. So
if we were family, Michael and I would be the children, and Dave would be the father. Sorry about that, Robert. That kind of leaves you as the grandpa.
I'm like a proud papa right now. I tell you, it's all good. I'm so proud of you guys.
You guys really mean a lot to us.
I would not be where I am without Robert and Russ and the Real Estate Guys family.
Well, it's we're just 2 guys talking on a microphone until someone does something. And so the reason our motto is education for effective action is for guys and gals like you who actually do something with it. So nothing warms our heart more. We love you guys. We love working with you. We love watching you blossom. It's extraordinary. And I have a couple of really pieces of great news, I think, if I could spend just 2 minutes. Is that all right?
please do.
Absolutely.
Here's the good news. And it's really great news. First of all, if we look at the last time we had a downturn in the real estate market that was across the board, it was 2008. And coming out of that, there was a long buying cycle. Yeah, if you bought in 2009, you might have done a little better than someone who bought in 2010. But if you bought in 2011 or 2012 or even 2013, you're still sitting pretty today. So there was time. And I think that's going to happen again. We go through this cycle. It's not like if I don't get the deal in the first week, I don't get the deal. We're going to have time. That's the first piece of good news. The second piece of good news, which is different than last time, is the U.S. is printing trillions of dollars. All these stimulus programs are money conjured out of thin air. If you don't understand that, well, spend some time learning it. But what it means, not speaking on is it good or is it bad or even politically about it, but just there's nothing that can happen with that much money printing except for inflation. And yeah, as you talked about, Michael, there'd be some interim deflationary periods in, say, rent and values, but long term, the only way this can go is for asset values to go up when that inflation hits the market. It happened last time, and that's why we saw real estate values go up and go up and go up for almost a decade. But there was nowhere near the amount of monetary printing as there is now. The stimulus is crazy. It's going to show up in real assets. It's going to show up in gold and silver. It's going to show up in real estate. It's going to show up in your life if you'll get in position. So I think our buying opportunity on the backside is going to be longer and better than it was last time. When markets are going up, everyone's excited. It's easy to make money. Throw a dartboard at the map and pick a place and buy there and you make money. but that takes no skill. Coming out of this, if you will sharpen your axe and if you will get educated and skilled, you're going to probably be able to create all the financial wherewithal you'll need for the rest of your life in the next 5 to 6 years.
100%.
That's an awesome thought. Indeed.
I was just thinking when you were saying that, Robert, it's going to be a part of your life, whether you choose that or not. You know, if you don't do anything, it's going to be a part of your life when you go grocery shopping or shopping for clothes. Inflation is going to be there.
Yep.
Whether you make it work for yourself or not is up to you.
Such a good point.
Yep. Let me just make it real simple for you folks. If you believe what Robert just said, what Dave just said, if you don't understand it, go study it. But if you believe that, the way you lose from that is work hard, stick all your money in the bank and save it. The way you prosper from that, buy real assets and use conservative debt. So real estate and debt are the ways to play on the side of benefiting from inflation while the majority of the nation and world has their savings eroded. When the Fed prints money, they create it out of thin air, but the value, they take it from everyone. The actual money comes out of thin air, but the value is eroded from the rest of us that have savings. So it's good to have reserves and have a conservative portfolio. But if you want to be on the right side of inflation, it's real easy. Buy real assets and use debt that your tenants are paying off for you.
Hallelujah.
Awesome, Robert. That's great. So crisis at realestateguysradio.com for info on that. Dave, you talked about a webinar. Can you, and then we'll get into some questions here. We have a hard stop here in about 15 minutes. But Dave, if you can share on that webinar that you and your team did.
Yeah, again, part of that, challenge versus opportunity. We got another gift handed to us. Part of the CARES Act was in part of that several hundred-page document. There was a provision for a net operating loss carryback. So now, I know a lot of folks who in the last 2-3 years have really, educated themselves, gotten themselves in a much better tax position just by learning and coming to these events and educating themselves. But I do know a lot of folks who you go back a couple years further and not so much. So this is a time in history where you can actually go back and let's say you paid taxes in 2015, all the way back to 2013, and you can go back and you can claw back those taxes that you paid in. So it's something that I wasn't hearing hardly anybody talking about, and it's sort of a big deal. And of course, my CPA, Tim Gertz, and I were talking about this, and he said, well, I got good news and bad news. The good news is you can go back and, you can go back 5 years and get all the tax money back that you paid in. And then, but for you, the bad news is your tax planning was so good that you don't benefit from it at all. And I said, well, that may be true, but I know a bunch of folks who will. So he came on, Tim and I did a webinar together on Tuesday night. And of course, it was packed and overflowing and oversubscribed, and a lot of people couldn't get on, but we recorded it and it's available to you. So, Michael, I think you have a link to that, so feel free to share that however you please.
Yep.
Thank you.
Great. Awesome. Yeah, I'm gonna pull that up, but we got some great questions here. So let's jump into this a little bit. Robert mentioned some economic uncertainty, and during this economic uncertainty, people cling to hard assets. What are your guys' feelings on the future of gold and silver?
All right. Well, this week's radio show is exactly about that. And we are big believers in gold and silver, but not as an investment. I don't think gold and silver that doesn't make any return. And it maintains its value, meaning everyone gets caught up in pricing gold and silver in dollars, or frankly, whatever currency they operate in. Now, gold is not at its peak in US dollars, but right now gold is at its peak in virtually every single other currency on earth, meaning gold is at an all-time high everywhere except in the US, and it's pretty close in the US. So because of that, people say maybe it's overpriced. Well, we can argue that till the cows come home, and we won't know until a year from now, 5 years from now, or 10 years from now. I will tell you, 10 years from now, you'll wish you had more gold and silver than you do right now. Now, that's not to say, oh my gosh, sell everything, get out of cash, and go buy a bunch of heavy metal. That's not the thing. You have to really get educated about it. Fortunately, there's some great resources to do that, but we're quite bullish in this space and have been for some time. But I will tell you, Russ and I studied the metals for 2 years before we bought any significant amount of them. We had to have a little, so we had our head in the game, right? Our friend Robert Kiyosaki always says, I won't pay any attention if I don't own it. First thing he did when he learned about Bitcoin is bought some. He goes, if I own it, I'll pay attention to it, which is knowing himself, right? So I would say that if you study the metals, there's some incredible opportunity. Premiums are high today. That's the nature of the beast. Those are not dealers who are getting greedy. That's just the way that the market responds to more demand than supply for physical metal. I think if you're learning, you will quickly discover that the place to start is with physical metal you can hold in your own hand. And the biggest reason of all the assets and of all the real assets, the precious metals have zero counterparty risk when held in your hot little hand. And that's a bigger discussion if you don't understand counterparty risk, but it's a thing you need to understand. So at the same time, spending time around a lot of gold bugs, you know, I know some gold bugs that have been selling because they've been sitting on this metal for so long, and now the price is up to the second highest it's been, right? And they want to get some cash, which is, I think, stinking thinking. You don't invest in metal so that you can turn it into cash later. You invest in metal so you can hedge and you can preserve your wealth. Now, I could spend 4 hours talking about that, but I think the short answer to that question is, if you don't know anything about precious metal, take the gift of time right now, study, learn about it, and try it on for size.
Awesome. Love that. So just explain I'll explain the screen up here. This is what you want to get your phone out and take a picture of. Dave, when you sent me the link for your video, I went to your YouTube channel and you have tons of amazing videos on there. I just recommend people go and onto YouTube, search The Real Asset Investor, and you can find the carryback video there. And then Robert, for Robert to get in touch, elevate@realestateguysradio.com or Crisis to get involved with the upcoming webinar that they have, Elevate to get on their list, and other resources they have. And my goodness, if you don't know about their podcast or haven't subscribed to that, that's step number one when we get done tonight.
Yeah, thanks for that. If you'll send that email to elevate@realestateguysradio.com, then you'll get all of our propaganda, except for the crisis webinar. So the crisis webinar is separate. So just to get on that list, I'm sure if you get on our mailing list, you'll eventually hear about it. But if you want to make sure you don't miss the crisis webinar, just send 2 emails. You'll be in 2 places, and that'll be okay.
Awesome. The next question here, Michael, I think I know what you mean, but what do you mean by rate changes? This would be rate resets on current loans. So yeah, you know, most people are aware that you get a mortgage when you buy a property and then you can refinance it if you want to. Well, there actually are no rules about what you can't do. I mean, there are some rules, but there's nothing preventing you from calling up your lender and saying, hey, rates have fallen off a cliff in the last 3-4 months. Do you have a better rate that we could do for my existing mortgage? So my wife and I did that on our personal home. We've done that on at least 2 of our other investment properties, in addition to the refinances. So a refinance is real simple. You get a new loan to replace the one that you have on a current asset. But a rate reset is simply making a request, seeing what they can do, and there's no reason not to ask.
And this can be a very great reset, and it's not at all like applying for a new mortgage. So you don't have to go through the paperwork, you don't have to go through the appraisal issues, and generally it's a reasonable fee. We're in the process right now. We've just dropped a a $10 million mortgage by 2 points for a very reasonable fee, which is a really big deal.
Huge deal.
And there was no reapplying, or it's not like you're going to a second bank and starting over. So there's no reason that you shouldn't do it.
Yeah, you sign a couple papers, pay a nominal fee. So great question. Dave and Robert, what is a good best next step for someone with limited capital?
Get a whole bunch of capital.
Okay, next question.
That was easy.
Oh, I love that one. And Dave has proved that that's easier to do than you would believe. You know, we're big fans of syndication, which is coming together to do deals. I think if you don't have a lot of capital, you can partner with somebody. I think also if you don't have a lot of capital and you're willing to do the heavy work to get educated, you can be the person that attracts the capital. And you might say, well, why would someone invest with me if I don't have as much money as them? Well, that's how most wealthy people invest, is with people that don't have as much money as them, because they don't have the time or the inclination to do all the work. So I think that's a great start. If you have very, very little money, then I think education is the best place to start. That's going to always pay the best rewards and pay the best dividends. You know, I can't imagine that if you came to the summit in August that you wouldn't at least get 3 times as much value as you paid. It's probably more like 100 times as much value. And it's hard to get those kind of ROIs on other assets. So education pays huge dividends. And I think that's definitely the first place to start. And doesn't mean that education is expensive. It takes time. If you go to Dave's YouTube channel, you will get some great education, but it's going to cost you a half an hour, 3 hours. Maybe you're going to binge watch Dave Zook. I'd recommend that over some other things you might binge watch. So that's an investment, but it's just as an important investment as your money. Your time is a scarce resource. So, and then I just like the idea of coming alongside people that are doing it. It's exactly what Dave always talks about. You find great teams, and oftentimes there's opportunity to mirror what they're doing or come alongside them until you get educated. It's how I got my start. If you want to hear that story, come to our syndication event. And I came along as a passive investor and got the bug. So it's, I think having the desire and having the goals are more important than having the money. Money comes and goes. Most of us don't, do this for the money. It takes money, but once you get that part figured out, the rest is where the magic is.
100%.
Yeah, and I'd like to share just a little short a story. I'll try and keep this short and sweet. But there was a young kid that came to our monthly book study. We have there's 8 or 10 of us that get together and have a book study, and he came in as a guest of a friend of my brother, and he was sort of wanting to see what he wanted to do with his life, and he knew he wanted to do something with investing in real estate, but he wasn't sure what. And I put him onto a podcast that talked about Airbnb and short-term rentals, and he got serious about it. And he educated himself and went to live events and listened, signed up for some courses and spent some money on his education. Today, 2 years later, he manages he manages our property for short-term rentals, and he has a bunch of others. So, there's an example of a young kid who took some education, got serious about it, just did a deep dive and then turned around and added value to guys with properties that didn't have time to manage. So, getting educated on a specific niche like that I think is going to be part of our future. When you look at technology and short-term rental, you look where, I think that kind of thing is going to be here with us for a long time. So if you get your mind around some of those things and get educated, then go out and add value to people who may not have the time to do it, great place to start. And you don't have to have a whole lot of money.
100%.
Love that. And
I think it's important, anytime you start getting educated, don't keep getting educated and not ever pull the trigger. So, that was part of Dave's, the guy he just mentioned got educated, but then he started signing contracts for management. For my wife and I, we didn't have a lot of capital at the beginning. I'd read all kinds of books, but we needed to pull the trigger. And so mixing experience with your education, because once you understand how the game works, that is much more resources than any money that you could get your hands on. So a lack of money is not a limitation, but you do need to apply yourself.
A lack of creativity and a lack of action, that's where the limitation is.
That's being poor right there. No creativity and no action. Now you're broke.
Yep. No matter what you know.
100%. Dave, I'm not sure that they worded this right, but you bought a new truck instead of a used one. And this was unconventional wisdom. Why did you do this? And is now a good time to buy a vehicle?
You know, I have a good friend who owns a Ford dealership, and I had him over for dinner. And this again goes to what we talked about earlier: hanging around good people, hanging around people who are masters in their space. You know, we were sitting around the campfire having dinner or something, and you know, I had this conversation with him. I was like, Gary, I really, you know, my truck's starting to get embarrassing. You know, how can I get into a nice truck and then trade it up every once in a while without taking a bath every time we trade it up? And so he said, he just blurted out, buy a brand new truck every year. I thought there's you're crazy. Well, but I mean, had he not been the professional, I would have thought he was nuts. But there's a way to do it. There's a way that you can get in and out of a truck for very little, sometimes break even, by buying at the right time, buying you know, not being too picky with your colors and your models and all that stuff, but buying at the right time, getting the rebate when it's the most aggressive before they start rolling out the next year's trucks. And then you put 12 to 15,000. There are some rules to the game. You put 12 to 15. You can't go ahead and put 100,000 miles on it in year one, but you put 12 to 15,000 miles on it, and you take it back at, again, the right time of the year, and about a year later, and you can trade it in for the next, or you can turn around and sell it to the dealership for almost what you paid for it. The way it worked for me, I think I ended up being out of pocket something like $2 or $3 grand, and that's just because I put an extra, you know, 4,000 or 5,000 miles on it and turned it in a month or two later than I should have. But there is a way to do it. But the real key is to have somebody on the inside that will help you do that. Let the professional help you do that. And so that's what I did, and it's worked out very well.
That's awesome. We're going to wrap it up here with this final question, going to be rapid fire. What book would you recommend the most right now?
Turning Pro by Stephen Pressfield. You probably know I was going to answer that. It's a quick read. It is a kick in the butt, but Turning Pro, Stephen Pressfield. Get it and read it twice.
Love it. Dave, do you have one?
I mean, I'm sure this audience is familiar with Rich Dad, Poor Dad. I'd say everybody's got to read that at least once. Compound Effect has been a really good one for me. I love Compound Effect. And then a quick, easy read that everybody's got to read that has a lot to do with, I think, what's going on in today's world. I've recommended this book so many times in the last couple months, in the last 2 or 3 months, and it's also, I interviewed the author, as Robert has many times, but I've interviewed the author, and it's also on my YouTube channel. So if you go on there looking for the webinar, it's on my YouTube channel. I got to interview G. Edward Griffin at Jekyll Island, which was kind of cool. But I would recommend everybody read Creature from Jekyll Island. So much of what's going on today, I think, is, I mean, when you turn around and read that book and realize that it was written 20, 25 years ago, and then you see what's going on with all the money printing and the bailouts and all that, and, you know, control and lapse of freedom and all that stuff, it's all in there. So it's going to take you, it's going to be more than a weekend read. That's a nice hefty read, but it's very, you can't read it and go about your life and be the same.
Totally. I got one little suggestion on that book. Read it the way that Ed says you should at the beginning. He says, here's how to read this book, and it's kind of unique. I didn't do that the first time. I didn't make it through. I went back and said, okay, I'll give in, and it's a really good way to read the book. And I concur fabulous book. You will, the light will come on, and you will realize there's a different reality than perhaps you thought. And plus, Ed's just a great guy. So watch the interview as well.
So true. Highly recommended.
Jerry, what's your book?
Well, I would have also said The Compound Effect. I tore through it so quickly recently. I felt like it was totally life-changing and mind-blowing. I bought a copy for each of my kids, and we're about to start a family book study on it.
Awesome.
Awesome. Just as we've been talking about what skills would be helpful during this time, if there's any skill that applies to everybody, it's people skills and how to care about your fellow man. So I actually had the book come up in my mind while we're talking here, How to Win Friends. Almost said funds, thanks to you and Russ, Robert. How to Win Friends and Influence People. I was given this book by my brother, and I read the title, and it so disgusted me because I read it as how to manipulate people into giving you what they want. And I put the book on the shelf for like 2 or 3 years. When I finally read it, it's basically giving you evidence and proof that genuinely caring about other people is the best path to success. So it's a phenomenal book. And Dave, the book that you recommended to me, The Go-Giver, has been incredible as well. So I would throw a little bonus.
Yeah, that's a great read, Dave. And I never heard of it except for you. So I've read
it. Yeah, great book.
Amazing.
Okay.
The Go-Giver.
All right, everybody watching, thank you so much for tuning in. Robert, thank you for sharing your time. Dave, thank you. You guys have been such gifts in our life and gifts to our group. We're very grateful to you guys for tuning in.
Thanks so much for the invite. Great to see everybody, and we'll see you in August.
Thanks for having us. It was fun.
Love it. Hey, everybody, stay on. There's a short questionnaire that we'd be thrilled if you completed for us. God bless. Have a great rest of your night.
Thanks so much for joining us.
See ya.